Hey guys, it is Julie here with TipRanks, and today we're taking a look at two high-yield dividend stocks under $20 per share. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two high-yield dividend stocks, and I'm talking yields of over 8%. They also come in with a strong buy consensus from Wall Street Analysts, plus they're priced at under $20 per share. So we're going to take a look at what it is these companies do and of course what Wall Street is predicting for their stock's future. Now we found today's companies using the TipRanks Stock Screener. Over on the TipRanks website, this can be found under the research tools. Here we're looking for a dividend stock. I was looking at high to very high yields, trading on the major exchanges, and with a strong buy consensus from top analysts. This gave me my list down below, which I then sorted by dividend yield. So first on our list today, we're taking a look at Euronav. Their stock currently trades under the ticker EURN and is priced at $17.71 per share. Over the past year, they have had some ups and downs, but overall are up 27% and 19% in the last 6 months. They do currently score an outperform rating on the TipRanks Smart Score with a 9 out of 10 based on bullish blogger sentiment and very positive crowd wisdom. Euronav engages in the transportation and storage of crude oil. They operate through their tankers and FPSO, or floating production, storage, and offloading operation segments. The tanker segment provides shipping services for crude oil seaborne transportation, while the FPSO segment receives hydrocarbon fluids pumped by nearby offshore platforms and provides field storage. Their activities include crew, ship, and fleet management services, founded back in 1989 and headquartered in Belgium. Euronav does pay a quarterly dividend, which currently sits at 56 cents per share for a dividend yield of 8.92%, well above the sector average of 3.75%. Their next ex-dividend date is coming up soon on September 6th for payment on September 19th. Euronav also just reported their latest earnings at the start of the month on August 3rd, and they did come out with a solid earnings beat. They reported earnings per share of 80 cents, which came in 15 cents ahead of analysts' expectations. And on top of this, the company saw their best ever Q2 operating performance outside of the COVID-related market spike back in 2020. Their CEO and CFO noted that they had a net profit of $162 million in their largely counter-cyclical quarter for the large crude tank market. They said that Euronav's operational and commercial platform is robust, well prepared for future challenges, and positioned for future growth to extract maximum value from the strong multi-year upcycle of the large crude tanker market. Of course, following any earnings report, we see many analysts reiterating price targets, but we did just have one analyst from JP Morgan initiate a buy rating on Euronav today. The analyst sees the tanker space as being interesting over the near and midterm, citing a combination of sharply improving profitability and limited new ordering, contra to prior cycles. The firm sees greater earnings longevity at Euronav and also a more attractive valuation compared to peer Frontline. Overall, the Euronav stock has 5 unanimous buys, and their average price target comes in at $24.63, which would be an upside potential of 38% from current prices. Looking down below, we see that new buy rating from JP Morgan with an upside of 20%. On the low end, we do have an upside of 12.8% and a high-end price target from 2 months ago of over 91%. And our second high-yield dividend stock is Rithm Capital. Their stock trades under the ticker RITM and is currently priced under $10 per share at $9.90. Their stock has seen growth of 9% over the past year and is up about the same in the last 6 months. They also score an outperform on the TipRanks Smart Score with a 10 out of 10, seeing increased hedge fund activity and bullish blogger sentiment. Rithm Capital is a real estate investment trust focused on residential investments. Over the years, Rithm has evolved into a leading manager of assets and investments across the real estate and financial services space. Rithm has grown to own approximately $7 billion in equity, distributed over $4.3 billion in dividends, and manages multiple operating companies with a diverse investment portfolio. As a REIT, of course, the company is known for a high dividend payout. They currently pay a quarterly dividend of 25 cents per share for an impressive dividend yield of 9.88%. Their last payment just came out on July 28th. They also just shared their latest quarterly report near the start of August on August 2nd, and their earnings came out nearly double the expectations. Q2 earnings per share came in at 62 cents per share compared to the 35 cents that analysts had anticipated. And that was on net income of $357.4 million. They noted that Rithm had one of their best quarters ever. They had near record earnings, grew their book value, acquired $1.4 billion of consumer loans, and grew their SFR business with the acquisition of 371 units. And of course, following this, we did have several analysts reiterate price targets and some increasing them as well. Right now, the Rithm Capital stock comes in as a strong buy with 6 buys and 1 hold. The average price target comes in at $11.43, which would be an upside potential of nearly 16% for the next year. The most recent rating came in 6 days ago with a buy rating from Credit Suisse and an upside of 11%. On the low end, we do have our hold rating with an upside of 6.22% and a high-end rating, though it is a few months ago. So we'll look at the RBC Capital as a more current one with an upside of 21%. So there we have 2 high-yield dividend stocks, both priced under $20 per share and both with a strong buy consensus from Wall Street. Let me know your thoughts on these 2 companies in the comments down below, and what are some of your other favorite high-yield stocks? I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just providing some information and entertainment, so please make sure you always do your own research and due diligence and stick to your own investment plan. Thanks so much for watching. I hope you guys have a great day, and I'll see you back here next time.